Hello and welcome to Pro Trader Strategies Market Commentary for Friday, August the 24th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. Having all that out of the way, let's get it on. With some economic data, we got here in the United States, we got core durable goods, which basically is anything we buy that lasts for over 3 years, expected to last over 3 years. And this strips out some of the more volatile aspects of that number, like airplanes, automobiles. So core durable goods came in at 0.2%, expected to be 0.5%. They revised last month's number down from 0.4% to 0.2%, so making that number look even worse. Durable goods orders came in at negative 1.7%, expected to be a negative 0.7%, and they revised last month's number down from 1% to 0.8%, so much bigger miss. Again, even so on durable goods numbers. We also have Fed Governor Powell speaking later, and the Jackson Hole Symposium is still going on. One thing to note is some of the Fed governors are still talking about increasing interest rates the rest of the year. I did see one Fed governor say they expect to see the economy slow just slightly going into 2020. All right, but we're not really seeing a whole lot of that right now, albeit this week's numbers have not been as great as we would expect or we're looking for. So keep your eye out for that. We've been seeing really good numbers. Now we're starting to see those numbers kind of playing off and maybe even slightly dip. So that could be a big catalyst for the overall equities, although we're not really seeing that right now. All right, crude oil moving higher right now, trying to test that $70 a barrel area and the 50 Fibonacci. This is the 50 Fibonacci on the 3-year fib, if you will. That's going to be a pretty major resistance area. We're peeling through that just slightly right now. A settlement above 70 would be a huge coup for the bulls. I do expect it to stay right in this $60 to $70 barrel area. Anything above 70 starts getting a little long in the tooth. So especially with economic data that we've been seeing not being so great. Then let's talk about gold futures moving higher today quite a bit, up into the 12 handle again. We've been out of there for a little while, but I'm saying almost up 20%, up almost $20, which is very close to 1%. That's a big move in gold. That helped me out in my GLD that I'll talk about here in a little bit. Bitcoin, nothing to see here, up $70, but just flatlining. Bonds still trying to push higher, despite the fact that the Fed is continuing with this mandate of increasing interest rates, which leads me to believe the bonds have nowhere to go but down. I've got all kinds of positions on for that type of trade with my TLT and everything else. I'm looking for it to turn around. VIX, not in the 12 handle anymore, still in the 11s, double digits still there, but that all is because of the equities pushing higher today. We can see here with the Dow Jones Industrial Average getting above that 38 Fibonacci level that we were talking about, that lines up with the value area high. That it makes it a major resistance area, because as soon as we get above that value area high, that's where there's not been a whole lot of time or volume has been spent at those levels. That makes the market want to roll back over a little bit. So unless we see something really drastic to start accepting price at those levels, it's going to start getting a little long, because long in the tooth in a sense, overextended, because those longs are going to really want to cover. But the Dow up nicely today. We've got the NASDAQ pushing above that 61 Fibonacci level. We were talking about all these levels for weeks now. that those are major areas of resistance today. We've got the NASDAQ above that, looking like it might want to settle above there, especially with it being a Friday, light volume, not a whole lot of economic data besides the bad data that we got. As light volumes kind of thin out towards the end of the day, we usually have a melt up on Fridays. In the summer anyway. Now, E-mini S&P is up nicely today, 16 points or better, but hasn't gotten above this 61 Fibonacci level extension. So that will really be very bullish in my eyes for the equities if all of these equity indexes finish above those levels and settle there. Pierce above during the day session and settling below really doesn't count. All right, E-mini S&Ps, as you can see, overnight inventory got long. No attempt at all to flush out those overnight inventory longs, and we have had unabated rally to the upside, even off that bad economic data. Did not throw a wet blanket on this market, and as you can see, we're just coming up shy of that 61 Fibonacci level, the extension anyway. Kissed it. May start seeing a little bit of profit taking going on here pretty soon as we see this roll over a little bit in the E-mini S&Ps and probably the equities across the board. All right, let's talk about my GLD trade. If you guys remember, I have only had this trade on since like the 20th, the beginning of the week, and I sold the September 110 puts in there when volatility was really high. You can see we had pretty high volatility. It started rolling over a little bit, and that's when I decided to get into this trade. It still has high implied volatility, especially for an ETF at that point in time. Plus, I was getting the directional move. I sold those for 58 cents, was able to buy them back today for 20. You can probably get them even a little bit better than where I got them with this rally moving higher and volatility continuing to come out. GLD ended up being a good trade there. I haven't added anything. I actually tried to do the straddle with no upside risk in GLD, had the trade in there for a little while. I think I was doing I was trying to sell the 111 straddle in there and then define the risk by buying the 12.5 calls. That being said, I was trying to get about $1.70-ish for that trade, and the market's gotten away from me, so I just canceled that order. But I might look to put that trade back on again, especially the closer we get to this 100 fib level. All right, that's about it. Yesterday's webinar was a great one on the straddle with no upside risk. Find out how to build out that strategy, what's the right environment to increase your probabilities. And that's about it, other than if you can't take that, take it easy.